be fine. All right, so good evening, everyone. Um, this presentation is our presentation on expense management and optimization. It is effectively module 2 of the personal financial makeover program. And our main focus tonight, we're going to be going over really just how we can reduce expenses, better manage our spending, as well as we will look at practical strategies for ensuring or improving financial stability. We're going to be looking at how we can optimize expenses. And expense optimization is a concept that I came up with just looking at some of the more advantageous spending practices that I would have personally practiced, and also things that I would have observed and just by happenstance or just by chance noticed that they would have had run-on beneficial consequences. So I'm going to be sharing some of those strategies with you this evening, and the hope is that in sharing those things, you'll be able to, one, reduce the expenses in different areas, and then two, ultimately be able to use expense optimization to generate savings that you can ultimately put towards investments in the future to um, better secure your financial well-being. So we have about 40 or so slides that we will go through. This presentation is going to be about 45 minutes, and then thereafter we will go into a Q&A session. Feel free as I'm going through to interject and ask questions if there is something that you want further clarification on, as well as if there is any like point of information, anything that would have happened in your personal financial journey that you think is applicable to any other strategies that I'm sharing. Okay, so I would have mentioned just now what the objectives are, but for this, we're going to start off pretty basic. We're going to try to define, appreciate, and differentiate the different types of expenses. We want to get a clear understanding of the various expense categories and how they impact our financial circumstance. Next, we want to look at how we can spend effectively. So we're going to look at practical methods for controlling and reducing unnecessary spending without sacrificing the quality of life. You'd have probably seen one of the posts I put out recently that not all money is really for generating the highest possible return. Some of it is some spending is for improving the quality of life. And so even in applying these effective spending techniques, we don't necessarily want to compromise the quality of life. And we'll talk a little bit more about that as we get into the application of these different strategies. Speaking of strategies, we're going to look at strategies for optimizing expenses. So this is where we're looking at how we can get the best and the biggest benefits from the spending that we actually do. We're going to learn how we can maximize the value of every dollar that we spend and turn even some expenses into opportunities for savings and rewards. And then lastly, we'll take a review of expense tracking. So we'll explore some of the tools, some of the main pitfalls that persons fall into when it comes down to spending. And we will look at our personal expenditures and just look at some of the different techniques and tools that we can use to ensure that our spending kind of stays on track and they are in line with our financial goals. So, um, before we even start talking about optimizing expenses or cutting expenses, let's look at a very basic concept. What's an expense? So an expense really is just a cost. It represents any form of outflow of money, and it could be for any reason. It could be for valuable resources that we need. It could be for goods, services, or other obligations. And simply put, our expense is money that we spend to acquire something to meet a financial need or a commitment. It's important for us to understand our expenses because what you will find is that most people actually don't have an income problem. For the greater majority of persons, especially those that are actively managing money, um, they have more of an expense issue than an income issue. And I say that against the backdrop that oftentimes many of us can live on less. Um, so some of the expenses, we all know the big ones, rent or mortgage, utility bill, groceries, loan payments are also expenses, any form of loan payments, whether they be student loan, car or personal loans. Transportation is another big expense category. Insurance premiums, I consider them an expense, um, but I also consider your savings an expense. And that again is another kind of mind shift that I personally apply, and it's a concept that I teach. So you want to look at your savings also as an expense. If we're looking at it from a business perspective, then our salaries are actually an expense to the businesses that employ us. Entertainment and leisure activities are also an expense, and they, of course, form incomes for other businesses, and then clothing and personal care items. So we have a broad array of expenses that we all face on a monthly basis. But some of those expenses can be categorized. So some of them are fixed and some of them are variable. Our fixed expenses are consistent and they reoccur every month. They generally do not change from month to month. And that has a benefit to it in the sense that it allows us to plan for those fixed expenses in our budget. They are also relatively stable and they're predictable. And that, again, is another advantage when it comes on to our financial planning. So the big items that are examples of this would include, for example, your car note, your rent, your insurance premium, and for the most part, your utility bills. So internet, telephone, water, those might have some amount of variability in them, but for the most part, they're relatively fixed in the sense that they come every month and are reoccurring. Um, and another point to mention here is that because some of these expenses are fixed and they're stable, we can often manage them quite effectively if we are able to like negotiate terms on some of these expenses. So a good example of this would be, for example, the mortgage payments. If you have been following the news in recent times, you'd have noticed that the Bank of Jamaica has reduced interest rates, I think, two times in a row now. And what they have been doing is calling for the banks to actually reduce the interest rate on persons' mortgages. And they'd be doing that because when interest rates would have run up, so did the mortgage rates. So now that interest rates are coming off, they're saying you can give the banking customers some reprieve by reducing the mortgage rate. And that, of course, would have an implication on your mortgage expense. In terms of the variable expenses, these are the ones that will change from month to month and are normally there as a result of lifestyle or personal choices. If, for example, you are the type of person that will go out a lot, that can have an implication for your variable expenses. Other categories might include how much you spend on groceries on a monthly basis, clothing, if you're the type to buy clothes on a regular basis, of course, gas, and as I mentioned before, dining. One of the important aspects, and it's why I keep stressing the importance of tracking expenses from the previous session, is that if you can track these expenses rather closely, you are able to identify patterns, and then you can start readjusting your budget by setting limits to avoid overspending. And that will also have the consequence of helping to improve the probability of you reaching your financial goals. So we can also categorize our expenses again into the category of needs and wants. So we'd have already categorized our fixed and variable expenses, but we can also go further to identify what are things that we definitely need, and then what are the discretionary spending that we do. So, for example, housing would be a need. So, the big three, food, food, clothing, and shelter. Food, clothing, and shelter. Those are the big three needs. And then within that, you have other elements that you might need to spend on. So other expenses associated with those things. So housing will have the implied expense of utilities. And then you have the other side of the spectrum now, which are the wants, things that you can spend with a bit more discretion on. So you can limit the amount that you spend on dining out, for example. Even clothing, for some, to a degree, can be considered a discretionary spend. Um, sorry. So based on the chart that we have on screen now, you can see we have also included other expenses, so like the utilities and insurance, as well as the savings and debt repayments. As I mentioned earlier, I consider savings an expense. So if we want to break those out, your needs would be the needs expenses would be the rent or the mortgage, the groceries, the utilities, the transportation, the health insurance, and I'll go as far as to add the savings on that side. And then for the wants now, you have things like your subscriptions, designer clothing, gadgets, dining out, etc., experiences, and so on. Okay, so now that we have an appreciation for all the different categories of our expenses and the different ways that we can think about our expenses, be they fixed or variable expenses, we can now start to talk about how we can optimize the expenses. All right. So we all have to spend money. So if we're going to spend, let us look at the ways that we can maximize the benefits that accrue from our spending. Expense optimization is a concept of getting the most value for the money that we have to spend on our regular expenses. And it encapsulates things such as smart shopping practices, the strategic use of rewards, diligent savings habits, as well as the use of credit. It's also about making a conscious decision around where we spend, with whom, and why. So all of those factors come into play. And if we're able to optimize our expenses, then we can really transform how we spend and use our expenses as a tool for achieving our financial goals. It will allow us to save more, it will allow us to reduce our debt, and ultimately even help us in terms of investing and attaining assets for our future. We're going to cover a few tactical strategies around optimizing expenses. And I've broken these down based on the expense categories that we'd have spoken to earlier. So we're going to look at housing and utilities. We're going to look at food and groceries, transportation, family and child care, as well as banking costs, credit cards, and debts. So we're going to go in that order, and we're going to look at different strategies that we can apply to optimize each of the expenses within these categories. I'm also going to share some dollar amounts that you can actually expect to save by applying these strategies, as well as other benefits, qualitative benefits that might accrue from the application of these strategies. So let's start by looking at housing and utilities. So for most people, your housing and your utilities will typically represent the largest portion of your budget. If you can implement smart strategies in these two areas, that can accrue to substantial long-term savings. So we're going to take that as the first section that we're going to look into, and we're going to focus on reducing the cost as it relates to our housing, energy consumption, as well as the other utilities around the house. So one of the first steps, if we're going to apply these strategies, is really for us to audit where our utility expenses are coming in. So you would have remembered from the last sessions, I did mention that we're going to be tracking our expenses for about 3 to 6 months, and then we're going to use that historical information to create our practical budget. So let's look at what would happen for the last 3 months historical for our utility. So we're starting out with the electricity. What you want to do is you want to identify those areas where you're using the maximum amount of electricity at any point in time. So your peak usage times, as well as the potential areas for waste. And if you can understand those consumption patterns, then that will actually be the key input for us to then apply the effective optimization. So here are just a few things that we can do just right off the bat. We can eliminate waste and unplug unused electronics. So there's this concept called phantom power or vampire power. It's basically what happens when you leave an electronic device plugged in. So it will still continue to consume electricity, even if it's just to keep the small light on the device on. But even aside from that, your chargers, for example, have a lot of electronics and we call them ICs, integrated circuit components inside it that still pull small amounts of power, and this can amount to between 5 and 10% of your electricity bill. So one of the things that you can do, and I do this, I actually invest in like power strips and surge protectors. And what I do is when I'm leaving the house, I just flip the switches on the surge protectors and the power strips. So that alone will reduce the amount of phantom power that is being used by those devices. Alternatively, you can just unplug the devices when they're not in use. It that will actually accrue to a larger savings for the electricity bill. Another thing you can do is to start using smart lighting solutions. So you can replace all of your incandescents or chlorofluoro um, um, bulbs with LED light bulbs. And this would be particularly useful in like your high use areas, like your kitchen, your living room, the bathroom. I take it a bit further, and what I do is I actually install portable, rechargeable LED lights for different areas in my apartment. So we have little round LED lights in the closets, in the cupboards, in the bathroom, and in the kitchen. And what these do is they are also motion sensitive, right? So they only come on when we go into those particular areas. And these were very cheap. So we bought them for like $5, and we've been using them um, for quite a while now. Definitely more than a year since we moved here. Um, and that has really accrued to a significant savings in our electricity. Another thing you can do is to, and most of us will know this, just invest in energy efficient appliances. So like getting an inverter refrigerator or an inverter AC or inverter microwaves. getting a DC fan as opposed to an AC fan. And then by assessing the energy star rating of the devices that you're buying. Now, the initial cost for those items might be a little bit higher, but the long-term savings that you get from them are definitely substantial. Another thing that you can do is to optimize like your AC usage. So one of the things that my aunt does is she she runs her AC for like 3 or 4 hours, and then she turns it off and she uses a small fan to circulate that air around the room. So that is one of the suggestions that I could definitely make to you here. So you can run your AC before you arrive home, um, or during when you have like peak heat, and then you can use the fan to circulate the air. That will make the room feel a lot cooler, and it will also reduce the amount of energy that you have to use for the AC. If you use a thermostat, and this might apply more to persons that are in the US or in the more modern apartment buildings that have thermostats, then you can set the thermostat a few degrees higher in summer and then a few degrees lower in winter. And that can accrue, all of these strategies can yield a significant reduction in the electricity cost. Based on my estimate, you can save between $1,000 and $3,000 per month. And this is, of course, going to vary based on your electricity usage. All right, so this is just a summary of those key ideas. So one, you can unplug unused electronics that will eliminate phantom power. You can switch to LED lights, and then of course you can optimize your AC usage. Now let's switch over to water. So in terms of water, one of the things that is a massive drain on one's bank account for water expenses is the leaks. So one of the things that you want to do is you want to replace worn seals and taps on the toilet tanks, for example, to prevent water waste. A single dripping faucet can waste up to 3,000 gallons per year, 3,000 gallons of water per year. Um, Speaking of gallons of water, another thing that you can do is to install a smaller size toilet bowl. If you own if you own the place, or if your landlord would facilitate that. So one of the things you can do is to switch out your tanks for a 1.2 gallon flush capacity instead of the standard 1.6 gallons. That alone is going to significantly increase the savings that you will get from your water related expenses. And then thirdly, you can manage the climate control. Again, this will apply to persons who are in like the newer apartments where you actually have the thermostats installed there. Another thing that you can do is to be strategic about how you manage laundry. So if you plan your laundry days strategically, you can actually wash only when you have full loads, and that will allow you to use less water and electricity simultaneously. So that will then compound the savings that you can get. My estimate, you could see a reduction in your water bill from $500 to $1,500. For the other utilities now, and I guess I think this is like the last one. Um, in terms of like internet, one of the things that you can do is you can actually negotiate your internet bill. This is something that again my aunt does. I've never thought to do it, but she's the one I saw do this, and I thought it was really good. So what she did was she called Flow and mentioned to them that she has been their customer since they were C&W. And ultimately they were able to find her records and they actually reduced her internet bill. Um, so her internet and phone are together, but it's been like that since C&W days. Even before like Yard and Road and so came in. And so they took that into consideration. And ultimately they reduced her bill. I'm thinking to try it, but I want to have this this plan that I'm on for a few more, I want to say a few more years before I try that. Another thing that you can do is to research a competitor's offer. So if you, for example, were to get a quote from Flow, sorry, from Digital to say they're offering you X, you can use that as a bargaining chip to negotiate a better rate with Flow. And I've seen persons do that successfully as well. One of the things that is also possible is for you to simply switch. So if Flow is saying that their internet package is $7,000 and um, Digital is offering 6,000 or $5,500 package, especially when they have like the bundle discounts or the periodic promotions that they do, then you can switch and realize those savings. All right, so I already spoke to the point about mentioning customer loyalty. That's my aunt's strategy. Um, And then, of course, just by the example, the savings that you can realize will range from about $500 to $1,500. It could go to as much as $2,000. All right, I spoke to this earlier in terms of the benefits that can accrue from the mortgage rate. So for homeowners, if you can refinance your existing mortgage, once rates come down, then you will start to see significant savings from your original mortgage. Another strategy that you can use in applying this is to get an updated property valuation. So if your apartment is say in a built-up area and there are new developments happening within that area, then those developments are going to have the implication of increasing your property value. And so what you can do is you can then get a valuator to revalue your property. So your property could go from being worth 17 million to 23 million. That additional 5 million or so that you would have gotten would allow you to one, refinance the property for a longer period, as well as it will have the benefit of reducing your mortgage payment. And then you can do with those savings what you will. You can decide if you want to invest that or put it towards some other expense. If you're a renter, one of the things that you can do is you can start to do the cost benefit analysis for where you work versus where you rent. Sometimes just commuting for a slightly longer period can have a dramatic impact on the difference in rent that you pay. So as an example, if you're renting in Kingston for a two-bedroom apartment, that could be close to $200,000. Whereas in Portmore, you could get that for say 130,000. And if you're willing to go a bit further out to say Old Harbor or so, you could even find it for under $100,000. So you'd have to weigh the proximity to where you work versus the rent prices. So that's one option. Another option is for you to negotiate a longer lease term. So like if you rent, oftentimes when you're renting, you get different options. So you can either rent the place on a monthly basis, you can lease it for a year, 2 years, or even in some cases up to 5 years. If you can opt for the longer term, then oftentimes what will happen is that the monthly rent charges will, if it will have some amount of reduction in compared to doing it monthly. Another thing that you can do, especially if you are renting, is you can review the maintenance responsibilities for your rental agreement and understand potential hidden costs. And then you can renegotiate those. So, for example, for our apartment, we are responsible for all the doors, the windows, and the internal like cabinets and so on. But those are things that you can negotiate. So you could say, for example, okay, we'll be responsible for like the cabinet doors and so on, but not the major doors. Um, because I mean, those form part of the building. So those could fall under the building maintenance, especially if you are paying maintenance aside from your rental charges. And of course, the savings that can accumulate from this would range from between 3,000 on the low end, even up to as high as 10,000 in the cases where you are doing a longer lease term for the apartment. And you can realize similar savings when you renegotiate when you refinance, sorry, when you refinance your mortgages. So before we move on to the next item, just some general housing and utility expense tips. Number one, and this is the optimization section of it. So number one, sign up for loyalty cards. So look at who you regularly spend with. So who do you regularly buy groceries from? Do they have a loyalty card? I know that Brooklyn, for example, has one. GK would have one as well. And of course, if you shop with PriceSmart and so on, then you get those savings by not only buying in bulk, but by just getting points and discounts from being a holder of their members card. The other thing that you can do is, and we do this, you can use your credit cards strategically. So for us, we pay all our utilities um, using our credit cards. We pay for our groceries using our credit cards. And then what we do is we pay off those credit cards using the cash that we would have used under normal circumstances. That gives you the dual benefit of not only getting the points associated with your loyalty cards or your membership cards, but also points on the credit cards that you're using to pay for these expenses. The other benefit to using the credit cards is that you help to build up your credit history. For us, we don't recommend spending more than 30% of your credit limit. So one of the things that I do is I actually negotiate with and this happened quite recently, well, on both occasions. But what I've done is I've actually reached out to my financial institutions and I've had them increase my credit limits because after I pay utilities and um, groceries, I find that my credit card bill was coming up relatively close to where the limit was. I didn't want the situation where even if I didn't pay it, or even when it gets reported, let's say I paid it, I didn't pay it until after the reporting date, because there is a difference between the reporting date, which is when the credit card company sends over your information to the credit bureau, and the payment date. So the payment date is typically sometimes 3 to 7 days after the reporting date. So what I didn't want to happen is for them to report my usage as like 70 or 80% of my credit limit. So I reached out to my credit card company and asked them to increase my limit so that even though the expenses might go well over what I typically would be spending on the card, it does not affect me in a negative way because I'm nowhere near my limit. No. So that's one of the strategies. And of course, the more I'm spending on the card, the more reward points I'm accumulating on the card as well. So another benefit is that you can, if you have a consistent history of paying your utilities, so Flow is a good example of this, Flow Digital. I don't know about JPS, but for Flow and Digital, they actually report your payment history to the credit bureaus. So you can verify with those utility providers that they are in fact reporting your payment history to the credit bureaus. And this will help you to build up your credit score with each on-time payment that you make. Of course, again, using the strategy where you're using the credit card to pay for the utility bill, you are again doubling up on those benefits. Right, and that's basically summarized here. So implementing all of those utility saving methods simultaneously will create a compounding effect. So for example, if you're reducing your electricity usage whilst using cashback on the smaller bills, then this will optimize the expenses by giving you the dual benefit whilst improving your credit worthiness. All right, so that was a lot. Any questions before I move into food and groceries?
No question.
Okay, I heard Monifa. All right. All right, so let's look at food and groceries. And the strategies here are going to be pretty similar to what I mentioned just now. There might be, especially around the spending part of it. So for most of us, again, food is going to be the second largest expense that we spend on. So after housing costs, food and grocery expenses will often represent the second largest category of household expenses. So here is another area where we can realize some significant savings. So in what we're going to talk about basically are strategies that we can use to eliminate waste. That's one, but that's one area that we will get savings. And then we're also going to look at the ways that we can be strategic around optimizing the expenses associated with food. Can I, 1 second, let me see if I can clear those. Okay. Okay. So food and groceries. So one of the easiest ways to realize savings from our food and grocery bills is to shop with a list. And you'd be surprised how many people do not do this. We just walk into the grocery store or in the market and we just pick up stuff. But one of the things that we can do to realize significant savings and reduce the expenses associated with food is proper meal planning. So what you can do is you can select core meals. So if you choose 2 or 3 main dishes that you will prepare in the week, these can then become your quote unquote staple dishes. And you can buy the ingredients for these in bulk. That's going to reduce the amount of spending that you do. It's also going to reduce the amount of thinking that you have to do when it comes on to your meals. Creating a detailed shopping list. So again, something that we do. We never go shopping without a shopping list. I am a stickler for that one. So we make very specific shopping lists, and this is often based on what we expect to eat for the 2 weeks or for the month. And of course, this has the major benefit of this is that it avoids us making impulse purchases. We also optimize the food that we buy. So for the groceries, we plan intentionally for the leftovers that we have. And in some cases, these can become work lunches. I work from home. Oftentimes, I don't have time to go out and get lunch or to even make it. So I use leftovers specifically for that reason. And of course, the consequence of that is that I save on lunch expenses. Another thing that we can do is we can ultimately reduce the amount of waste that we produce by being creative with those leftovers. Food waste is going to be one of those things that will significantly impact our budget. If we're able to plan and use those leftovers intentionally, then we can eliminate the waste that we would have generated and we can reduce the amount that we spend on lunch. The savings here is going to range. It's going to range rather widely for different persons. For me, it's to the order of thousands of dollars per month. Again, because I work remotely. For some persons, it might just mean a $2,000 or a $3,000 saving for the month. But again, that is significant within the context of achieving our financial goals. All right. I spoke about buying in bulk and the benefit of doing that. So wholesale clubs like PriceSmart, of course, will offer significant discount on per unit pricing for many household staples. If you're buying in bulk, that's going to compound the savings that you can have. And what are some of the things that are best bought in bulk? Toiletries, um, pretty clear-cut one. Non-perishable foods. So if you prioritize items with like a long shelf life, rice, canned goods, pasta. Um, well, I already spoke to toiletries, but cleaning supplies and so on. Those things, you purchase them in bulk, you're going to realize savings as opposed to buying two or three of them on every grocery or every shopping run that you make. All right. And of course, there are other strategies that you can use. You can do cost comparison, where you calculate the per unit cost for each item that you're buying. And you do this across different supermarkets and you see where you're actually getting the best deal. Not something that I do. I typically shop between high-low and Brooklyn. For me, it's not necessarily worth the effort sometimes. Again, quality of life for me to necessarily be running between the three or four um, grocery stores to try to find out which one is going to save me $1 on tuna, for example. Um, right. And then another thing that you can do is to ensure that you just have proper storage containers and space for bulk items such that they will maintain their freshness. The monthly savings that this can generate will again range. It can be between $1,000 and $3,000 based on what I've seen. And that's because there's not much variability in my personal grocery bill. Reason being, again, I have a list and typically I just buy what's on the list. If I have oversupply of something, I might not buy it in my next run. All right. Another strategy that you can use. Um, and this one is based really on the psychology of spending. So for some people, spending cash is more visceral to them. So one of the strategies that I'll recommend is that for smaller purchases, what you can do is to use cash. So if you just have to make a grocery run, then use cash for that purchase as opposed to using your card, what that is going to do is it's going to eliminate your tendency to shop or just pick up things based on impulse. And how do you implement this? You basically set aside a small cash allowance for unplanned grocery runs. You will withdraw exactly that amount on a weekly basis. And then when that cash is done, you're basically going to just wait until you have until the next week comes to do any impromptu shopping that you might have to do. There's a name for this. It's actually called the envelope method. And the envelope method works because it forces you to do two things. One, forces you to stick to a budget, and two, it forces you to face that physical pain of actually spending money. So the benefits that can be derived from using this strategy tend to vary. For me, it's about $1,000 to $3,000. And then some, I'll just give you again some general tips. Most of them will be similar to what we'd have talked about with the electricity and utilities um, before we move on to the next section. So again, loyalty programs. So sign up for your grocery store reward programs. This is going to enable you to earn points on the purchases that you're already making. So many programs will offer exclusive member discounts. So GK just launched theirs that gives you the exclusive benefit with theirs is that you can now effectively encash all of your reward points at one time. Previously, you weren't able to do that. But that's a benefit that you can now take advantage of. Again, if you use credit cards, you are going to compound the savings and the benefits that you will get from utilizing that strategy. And then using the envelope method is going to allow you to avoid impulse buys. So if you keep a separate cash allowance specifically for those unplanned grocery needs, then when that cash is done, you basically have to wait for your next planned grocery shopping list to make additional purchases. And it might not work, it might not be foolproof. There might be times when you will actually have a need that you need to spend. In that case, again, remember we're not compromising quality of life. So if you have a need, then you're going to feel the need, and you just account for it in your next budget. Okay, so again, I don't even know how good I'm doing time, but somebody can tell me. Um, we're going to look at optimizing our expenses around vehicle and transportation, and we're halfway through. All right. So for this one, again, you want to first establish your baseline. So before you can implement any of these strategies, one of the things you want to do is to understand what are your current transportation costs. And you want to know this in as much detail as possible. So how can you do this? You're going to, if you drive, you're going to record all of your gas purchases. So you want to track every single fuel purchase that you make along with the odometer reading to calculate the actual kilometers per gallon. All right. Um, if if you don't drive and you use a ride sharing apps, then you're going to document all of your Uber trips and the cost for the past 3 months so that you can know what are your actual habits, what are your patterns around the use of ride sharing. Then you're going to map your travel patterns. So if you can identify where you're taking unnecessary trips for errands and stuff like that, then you can also find out where are those opportunities for you to combine multiple errands and reduce the total travel expense. So there are a few tools that you can use for this. For persons who drive, you can use apps like Fuelio or Amber Gas Tracker. You can go the old-fashioned way and simply use a notebook. And you can keep this in your glove compartment where you just document every time that you purchase gas. And of course, you can go a bit more tech savvy. If you're a bit more tech savvy, you can use a Google Sheet or Excel spreadsheet to document every time you're spending on transportation or fuel. Okay, so we talked about using a fuel tracking app, but some of these service stations actually have a fuel rewards card, or they call it a gas card. So I think Texaco has one. Um, Fesco, I don't know that Fesco has one, but it does have the Fesco being a listed company, it is a part of the JSC's reward program. So if you sign up for the JSC rewards program, then when you shop at Fesco, whether you're buying engine oil, brake fluid, wiper fluid, whatever it is, um, windshield washer fluid, um, whatever it is, gas, then you're accruing points from the JSC's loyalty program. Right. So that would have covered both of these. So we mentioned Fesco being a listed company and then the fuel rewards card or the gas card. And then another thing that you can do is to just do the comparison. I think in Jamaica, most of this is done manually. I don't know if we have an app like GasBuddy that will allow us um, to compare gas prices from different providers. Okay, just 1 second. Let me pause this. All right, guys, can you hear me? I don't know if either of you are able to answer, but Monifa is telling me that she's getting an error, so I don't know if everybody else is facing that issue. Okay, all right, thanks. Okay, let me minimize this and I'll continue. Okay, all right, so where was I? I think I can go through a few of these slides a bit faster. All right. So other strategies that you can use to reduce or optimize the expenses as it relates to transportation. For persons who live relatively close with co-workers, then you can carpool. Another thing that you can do is you can develop a driving schedule and implement what I call alternative driving. So if you develop a weekly um, schedule where for certain days you can actually decide to either use public transport or use ride sharing services as opposed to actually driving. And then another strategy that you can practically apply is to plan your trips and then combine errands that are within close proximity for when you have to travel for those purposes. So like for me, again, I work from home. if I'm going on the road, I'm not just going to go on the road for one single thing. So I will batch my errands, and then that when I go on the road, I'm going three, four different places to sort out whatever business that I need to do on the road. That of course guarantees me some savings in terms of my travel expenses. Other benefits that will accrue from doing any one of these things is that you're going to reduce your fuel consumption, you're going to have lower vehicle maintenance costs, and of course, in areas where you have to pay for parking, like at such port, you're going to reduce those parking expenses. The monthly savings that can accrue will range between $2,000 and $5,000. Another thing, and this is a big thing for people who drive, maintaining your vehicle's maintenance schedule. So preventative maintenance economics is what it's called. Um, if you can stick to the regular scheduled maintenance, then what it's going to do is going to reduce the probability of you running into those big situations where you need to end up spending a whole bunch of money to repair the entire front end, to change the to change your why is the word escaping me? To change a fuel pump, right, which is one of the better known issues, or to do any other significant vehicle repair. So a lot of the manufacturers will tell you that for X amount of kilometers, you need to do an oil change and a filter change. You need to do a brake inspection. You need to check the fluids. You might need to bleed the brakes, for example. You want to make sure that you're checking the tire pressure. These will also have recommended levels. You want to inspect belts and hoses, test your battery connections. Recently, for my aunt's SUV, we so it doesn't drive a lot because she doesn't use it. I hardly use it. Again, work from home. But um, we had to do the insurance. We had to renew the insurance recently, and for some reason, the vehicle would not start. Um, Only to find out that what happened was the terminals and the battery had started to corrode. So simple maintenance would have fixed that issue, saving us about $17,000, which is what we're going to do because we thought we were going to have to replace the battery. Thankfully, that was not the case. So maintaining the regular preventative maintenance of the vehicle is another way that you can see significant savings. I have here that the amount that you can save ranges between $10,000 and $30,000. It can be significantly more. So for that vehicle, if we were supposed to replace the engine, we were looking at somewhere between $50,000 and $70,000 to get a new engine for that van. And then the battery would have been at between $12,000 and $17,000. Another thing that I recommend, just based off some of the experiences that I've seen and had personally, is that we can create a dedicated vehicle maintenance fund and then make monthly contributions to that fund. So it can be anywhere between $1,000 and $2,000. And then when things happen, you will know that you have the cash available without having to either disrupt your normal budget or go into debt. In terms of optimization now, one of the things that we can do is to review our insurance. Again, recently had to renew the insurance, and the first quote we got was for nearly $70,000. Now, my aunt has had no accident with that vehicle, and she's had it for years. It hardly is used now. And so one of the things I asked the insurance company to provide us with was a no claims letter. And just by asking for the no claims letter and then realizing that there were no claims on the insurance, they were able to reduce that by close to 15%. So we ended up paying just under um, what was it, 62,000 for the insurance as compared to nearly $70,000. So review your insurance every year, guys, and you can also shop around. So request quotes from different insurance providers. I know that it is convenient sometimes to just renew your insurance with the person that you have it with, but it is possible to realize significant savings by switching insurers from time to time. Another thing that you can get is a low mileage discount, as well as you can ask about the claims-free incentives. This claims-free incentive is the no claims thing that I mentioned earlier. Now, a few other things that you can do, um, especially as it relates to optimizing your vehicle expenses, I would have spoken to creating a dedicated account for all vehicle-related expenses. So this would include your license, insurance, fitness, registration, and a lot of what you can do with this account is basically use that account. You can fund that account over time, but also when the time comes to make these payments, what you can do is again, most of these payments you can make using a credit card. So you can use a credit card to make those payments and then repay them from the dedicated account, giving you again the benefit of building credit, so building up your reputation in terms of your credit, as well as getting those reward points. In terms of funding that account, what you can do is, and this is what I do, so I track the annual costs for insurance, registration, fitness, and all of that. And then what I do is I divide it by 12 to find out what the monthly cost would be, and I try to make those contributions towards that account. Um, Automatic transfers is just where you would set it up to be done automatically. So those monies go over automatically to that account. Um, and then I already spoke to this, where you pay those expenses from the dedicated credit card. Your savings are going to range anywhere between 3 and 8,000. That's only as a guide based on my experience. In some cases, I mean, if you're a new driver, your insurance is probably going to be on the higher end. So after 2 or 3 years, if you're looking to switch, you could realize a far greater savings than the $8,000 that I have here. General savings tips, as well as optimization for vehicular expenses. Again, sign up for the loyalty programs for the different auto parts retailers or the gas stations that you use. Use a credit card for the regular big ticket expenses, so insurance, registration, etc., and then pay off the balance before the due date using the funds from your dedicated account. And then another thing, this would apply to the groceries as well. You can use the envelope method as well to keep some cash for the minor expenses. So things like windshield wiper replacement, brake fluid, um, sometimes engine oil, stuff like that. You can use cash for those smaller expenses because just in case you tend to go over your credit card limit or you're approaching it, then you can avoid getting any of those penal fees on your credit cards. I mean, you guys won't run into this issue, I'm sure. All right. I am going to, so I don't have kids and I have no dependents, but I did include this for persons who have children and who might be um, even considering having kids. So this part I'll just go over briefly. I don't have any personal experience with this. I will tell you that. But some of the things that you can do in terms of reducing the expenses for family and childcare would be setting a fixed allowance, for example, for entertainment. So for extracurricular activities, for toys and so on, make that a part of your overall budget. And then just being diligent around that. Another thing that you can do is to evaluate the activities that you might want the child to engage in. So be they educational activities, social activities, um, extracurricular activities, and so on. You want to be able to determine the cost associated with those things and then prioritize them. Um, this might be a bad example, but for me, I tend to look at my business, for example, as a child. And so I make a separate budget for that. I'd want to make the recommendation that you do the same things if you have dependents. So for some persons it's children, for some persons it's going to be like siblings or even their parents. So you can factor those things in. All right. Another thing that you can do is consider trading babysitting duties. Um, Again, I have anecdotal experience with this one. So what you can do is identify compatible families. So first, identify parents with children of a similar age and whose parenting styles and values actually align with yours. And then you can, once you've established like the terms of those things in terms of what the scheduling and responsibilities are, then you can decide on, say, a schedule wherein you would probably keep the kids for a few nights out of the week, and then those other parents would keep the kids at certain times, and then that will allow you to save on like childcare costs, whether they be babysitting or daycare. I'm going to skip over this, and then I'm going to get into the one that perhaps most of us are here for, which is banking, credit cards, and loans. Just by way of information, we have about 10 slides to go through, and then we'll be done. All right. So optimizing our spending in terms of banking and credit cards. A few things that we want to do. You want to first automate any loan payments that we have. That is one of the telltale um, practices that we can do to avoid getting into the debt trap. And the debt trap is basically where a company is able to basically get you on missed payments and then start to compound the interest at effectively their leisure. So what are the actionable steps for doing this? You want to set up salary deductions for loans or higher purchase plans. There's a popular finance influencer that will tell you about her experience with ports and higher purchase. Um, right. But yeah, set up automatic payments for those things. That will help you to avoid the late fees and missed payments, which is exactly how they tend to catch people. Then you can preserve your credit score by being consistent with your um your credit card payments. So making sure that your credit card payments are on time. You want to use a calendar to remind yourself to make payments when um you're supposed to, and then you can reduce your principal on your on other debts by increasing the monthly payments that you would make. So I tend to overpay on some of my expenses. Um, and of course, that allows me to realize savings on the interest charges. The potential benefit of this is that you could see a savings from anywhere between $1,000 to $3,000. Again, this is just based on my experience. As an example, if you are supposed to have a late fee associated with a Sagicor credit card, that fee is going to be 2,500 and I think $52 the last time I checked. So automatic payments is a way to get around that. I mentioned this earlier as well, where I tend to make additional payments on some of my bills. So like the phone bill, I might overpay it. The water, I overpay that. The my electricity is prepaid, so I have a lot more flexibility in terms of how I pay that. But the actionable steps here is basically to add an extra 500 to $1,000 to each bill or loan whenever it's possible when you're making payments. That's going to reduce the interest that you will pay over time. Another benefit is that you can save up to $10,000 in terms of the long-term interest by consistently reducing the principal balances and doing so faster than scheduled. It will also help you in terms of building up your social credit with creditors once they see that you've established a pattern of making payments that exceed the minimum requirements. We spoke about refinancing your mortgages. You can actually refinance your other debts, primarily high interest debts. So you can call lenders, for example, to ask for lower rates or consolidate multiple loans at a better term. I would have done this in the past as well, and that would have seen my total loan payments go down by about $8,000. Um, Other benefits that will come, you will build up additional lending relationships. Yeah, and I am a person that believes in having multiple banking relationships. So that is something that I would also recommend. It will improve your credit score once you are showing that you are responsibly managing the different debt facilities that you have. And of course, if you are supposed to consolidate, what it will do is it will simplify the process of making payments for you, since you will now effectively be keeping track of one payment as opposed to three or even five. Another thing that you can do is to basically use different credit cards for dedicated purposes. This is something that I believe in, and it's something that I do. So, for example, in terms of our grocery shopping, I might choose to use one credit card that has a cashback on purchases as the benefit. I will then set a reasonable limit, which is going to be based on my total debt service ratio. We'll talk about that when we do um, the debt module, and then I'll use that only for shopping and for food purchases, so like Seven Crave and so on. I'll have another card that I will use for online shopping. So this one will typically have like fraud protection, and it will have benefits associated with online purchases. So one of the benefits for like the Sagicor card that I use for online shopping is that it it is dual currency. So it is both JMD and USD. When I make a purchase in USD, it converts at a more favorable conversion rate, exchange rate, than if I were to make the same purchase with my NCB card. Um, so that's another benefit of having multiple credit cards with different benefits associated. And of course, we spoke about the bill payments and how we can use the credit card for that. Other benefits, again, you have improved banking relationships. Once you display responsible card management, you can get discounted offers on financial products. So, for example, one of the insurance policies that I have with Sagicor, I got that as a result of having my Sagicor credit card. And if I were to try to get that policy outside of having the credit card, it would have the premiums would have been significantly higher. Um, we spoke about different reward points that you can get back in terms of cash back. NCB, I think, has a card. NCB and Scotia has cards that will give you travel points. Um, and then, of course, the other benefit is that you're building a credit history across multiple financial institutions. Additional tips that you can use in terms of reducing your bank fees is that you can assign each expense to a particular account. And then what you can do is to sum the amounts for those expenses and then make one single transfer. Why is that important? So most of you would know that the banks charge you for each ACH or each RTGS transaction that you do. But if you're able to say, okay, all of the spending that I'm going to do this month on groceries, for example, I'm going to be doing it with a Scotia account. If you are paid through Sagicor or through NCB, then what you can do is once you sum all of those cash needs, then you can just make that transfer in one single transaction, say reducing the amount of fees that you would pay. Similarly, for all of your cash needs, if you can estimate all the transactions that will require cash, then you are able to do one single withdrawal of cash, and then you can keep that cash in a dedicated location at your home, whether it be a safe or invest in a safe, by the way. Um, yeah, we'll probably talk about that a little bit more off here. But yeah, have cash at home for multiple reasons. And then if you need to, you can pull from that safe place that you have the cash as opposed to going to the ATM. And then lastly, use ACH transfers instead of RTGS whenever possible. The difference in this fee is sometimes between 5 times and 10 times. So NCB's ACH transfer is about $22. Their RTGS transfer is about $220. And it charges you on both sides of the transaction. So again, potential savings. You could see between 300 on the low end up to a few thousand on the high end, depending if you're doing a lot of RTGS transactions for the month, as well as multiple trips to the ATM. And then lastly, I'll say review your banking fees on a monthly or on a quarterly basis, and then find out where is the bank really making their money from you. So is it in your ATM cost? Is it in overdraft? Is it for maintenance? Is it for transfer fees? Um, or is it from like late fees or any other type of fee that they might be charging? And then decide if you want to change the account, the type of account that you have with that financial institution, or switch financial institutions as a whole. That can allow you to realize significant savings. Um, Based on what I've seen, it could go between, you could see $1,000 um up to $4,000. And this would vary for you. For me, this is on about an annual basis because, and I guess it's because most of my banking transactions are already optimized. Okay, so now speaking a bit more generally, um, aside from managing your banking and your debt efficiently, if you can optimize like your day-to-day spending habits, this can actually accrue to significant savings. And so we're going to talk about some of those strategies. I would have spoken to some of them before, but you'll see how you can apply a few others across the general spending category. So one of the things that I do in tracking my expenses is I write a description for what that expense is. And so that has helped me to identify where I spend impulsively. For persons who've been in the previous sessions, you would know that for me, that is on books. I tend to spend um, impulsively on books and perhaps more recently on colognes. So by tracking my expenses, I am able to be a bit more practical about each purchase decision that I'm making. Um, and then the other thing that I do is sometimes I intentionally delay making purchases, both small and large. So I might have 4 or 5 items in my Amazon cart and I'll just save them for later. And then I might find that a few days after, I might go and purchase maybe one or two, if any, of the items at all. Um, right. And then, of course, this allows you to kind of build in somewhat of a buffer between the time that you initially get that impulse to spend or to buy something and the actual purchase that you make. So the psychology is that um, if you are able to create a buffer between the desire and the action, it allows the emotional excitement that is associated with the expense or the item to kind of fade, allowing you to make a more rational decision. The natural benefit of that is that you're going to significantly reduce the amount of spending that you do, especially on unnecessary items. Um, for subscriptions, what you can do is you can use streaming or subscription services during the discounted periods or during their promotional periods, and then you can rotate between services. So if you don't habitually use a service. For me, that is Adobe, for example. I don't use Adobe all the time, but or LinkedIn. I don't use LinkedIn Premium all the time. But from time to time, they will reach out and say that they have this promotion where you will get 2 months for the price of one. And that's when I will resubscribe to that service. For other subscriptions like Amazon Prime, Duolingo, etc., you can use like a family plan where you can split the expense with other persons, either in your household or in your family. And then you can also consider free ad-supported alternatives when you are not using the paid subscriptions. This is going to also allow you to reap significant savings. I've seen up to $7,000 for me personally, because LinkedIn is like $50 for LinkedIn Premium. Um, but for normal persons, you can realize savings on even on the low end of about $1,500 just by being strategic around the subscriptions that you apply for. We spoke about using the cashback um, on the we spoke about using the credit card as a way to generate rewards points. In terms of using those reward points, a lot of times what we tend to do is to use them to make like a discretionary purchase. But again, you can reduce the total expenses that we face by using it to actually pay for our needs or fixed expenses. So if we can apply our cashback to either groceries, fuel, or credit card fees, those are ways that we can actually reduce the expenses and use those points to contribute to our necessary expenses rather than allowing it to induce additional discretionary expenses. And I did speak about maximizing the value by using the points. All right. Another strategy that you can use is to basically track your non-urgent wants. in a digital wish list. So for me on my phone, I have uh, a wish list and it's in every single one of my budget and it changes from time to time. So for example, last month, I would have added that I wanted to add um, some more jeans and I actually got them not in that pay cycle, but in the most recent pay cycle. Um, and that would have then come off of my wish list. There are other things that I have been on my wish list that I've gotten rid of, die-cast cars, stuff like that. And then when you're reviewing your wish list, a few things you can do is you can ask yourself, is is this an item that I want or is it something that I need? Is it something that I have used in the past month? Would I purchase this if it required sacrificing something else? And lastly, can I find a more affordable alternative? In keeping the wish list, I can tell you the amounts that I have here, you're going to save a lot more than that. So potential savings can be up to, I mean, if I'm buying impulsively, sometimes just 100 US dollars. So you could save up to 17, $18,000 just by doing this. Okay. And then let's see where I'm at. 45. On an annual basis, so if you're keeping a monthly budget, what you can do is on an annual basis, you can look at the things that you uh, have spent on that are yearly expenses. So insurance, for example. Um, again, as the vehicle associated costs. When I said insurance, I mean insurance for you. So your personal insurance. But you can also look at the vehicle related expenses. And then you want to see how you can optimize each of those expenses using the strategies that we've spoken about. You can also reassess your financial goals. So update your savings target based on life changes as well as your progress. And then also adjust your budget and the budget categories based on your actual spending habits and not just what you think you're going to spend on. And then last, we've spoken about this in the last session pretty much in detail, but you really want to analyze your spending habits. So track your daily expenses. I would have shared the daily expense tracker in a previous email and we'd have gone over it in a previous session. When this is uploaded, I'll actually link those sessions in the description of that video. Um, yeah, so use your dedicated expense tracking app or a spreadsheet just to know how much you are spending. Record all of your transactions, regardless of how small they are. Categorize all of your expenses and then include, for example, a date and the amount that you're spending for each one. There are apps that will allow you to do this. I would have also shared that in the previous email. So like every dollar or every dollar are apps. YNAB is another app as well as Money Lover, which is kind of my favorite one. And then all of this is going to help you to kind of identify your spending patterns. You can also look for the trends in terms of your spending data. So which day of the week or which week do you spend the most? Are there emotional triggers that happen that lead to you spending more? And then what categories really constitute the largest portions of your income? So and then, of course, you also want to find out where are the leaks. So when do you spend impulsively? And you want to try to dissect the situation or the reasons that you end up making those expenses. Is it that when you every time that you go to a particular place, you end up spending money that you didn't originally intend to spend. So stuff like that. And then we spoke about this. We spoke about reviewing and adjusting your budget. So you want to do like a monthly review where you're comparing your actual spending against your budget amounts. I do that in this sheet and I've shared it in here. Right. So this is from my budget, and I track not only what I've spent. You see, I have the running balances here. I have um, right. So I have my budgeted amounts, and I have the amounts that I've actually spent, which allows me to see my running total and my remaining balances. Okay, right. And then you can do this on a quarterly basis if you want, and then the annual overview that we just spoke about. In terms of a budget review, you want to find out, are all of your income sources accurately recorded? You will notice also, again, for the spending tracker, I have multiple income sources here that I am tracking. So I have my full-time employment salary, a part-time salary, a side business, a hobby, and other expenses. Sorry, other income source. Then do the expense categories reflect your actual spending patterns? Is your emergency fund allocation sufficient? Are you making progress towards your debt reduction goals if debt reduction is one of your goals? Um, does your savings target align with your long-term objectives? Have you accounted for irregular expenses? Remember that strategy where I said you can take like the big expense and divide it into 12? That's one way that you can actually account for an irregular expense. And then you want to ask also, is there room for occasional treats without derailing your progress? Again, not compromising quality of life. Right. So this again goes into tracking um, those small items that could really serve as like holes for draining your salary. One of them is subscriptions. I'll just talk about that one because that's a big one. But you really want to keep a track of your subscription. Sometimes you subscribe for something and we might have subscribed to it for uh, um, promotional period or for let's say a 7 day free use or whatever, and we forget. Um, this happened to me with a Ty Lopez course, and for months I um I say I was penalized for it. That thing cost me about $50 for about 13 months before I was able to finally um cancel that subscription. All right. The common pitfalls, most of us would be familiar with them. It could mean overspending. The problem with that is just that you're regularly exceeding your budget, especially in terms of the discretionary categories. And the solution for that, the using the envelope method is a really effective way to address that issue. Failing to adjust the budget. This is why tracking the expenses is so important because you cannot just create a static budget and not review it and think that the allocations that you'd have made in that initial budget that was made um, 5, 7 months ago is going to be reflective of all of the expenses that you might be incurring in your current circumstance. So the fix for that is to basically conduct a regular budget review where you're treating the budget as a living document and it is supposed to change and evolve with you as your circumstances change. And then another pitfall, another major one, is ignoring the small expenses. So the small coffee run, the small item that you bought on Shein and had to clear, the shipping costs associated with those things. The issue here is that we are not properly accounting for the true cost of all of the expenses that we are facing. And of course, the solution for that is to literally track every single expense that you have. And of course, if you do that consistently, it's going to reveal all of the areas where we have what are called spending leaks. And then we can properly allocate those expenses. If they are necessary expenses, we can properly allocate them to a category. If they are not, then we can try to eliminate them or get better control of them. Again, without sacrificing the quality. Other pitfalls which you would have spoken about would mean emotional spending, spending without a purpose, or saving without a purpose, rather, which is why setting goals is so important. We spoke about that in the very first session. Um, Justifying our expenses, lifestyle inflation, and then the ever present one of financial procrastination, which is simply is not setting specific days for the financial related tasks, whether that is to review your budget, update your tracker, um, check your accounts, or just see where you are with your financial goals. Okay, so that basically brings us to the end. I do have some action steps that I would want for us to take over the um next few days. I'm going to extend that to say next few weeks. But I will share these in the follow-up email where we'll basically summarize the key points. So I'll probably get this presentation down to maybe 12 slides or so. And also in that email, I will share the action steps that we should be taking ahead of the next session and what we'll be following through for the next few weeks of the program. So with that said, that actually brings us to the end of the presentation. And I know it was a lot of information. I am going to make the slides available for anybody who wants to review them. And the presentation will again be uploaded um, to the YouTube channel, and I'll share the link in the group for anybody who would have missed today's session. So I know it's been a long one this evening, so um, I'm going to just end the session here, and then if there are any questions, we can kind of take them or you can take them offline.